what does vetting mean for you? Because you're not a bank.
Half of our team is ex-bankers. So the platform is actually built by bankers and, by financial services, not just bankers, financial service individuals for the industry. We know the questions people ask. We know the 300 questions that banks, insurers, everybody asks before a vendor gets brought in. We ask the 40 real ones.
Joining me on the couch all the way from London is Karan Jain.
I keep seeing this person at every single conference, so they must be good. Over-indexing when it comes to vendors is a thing, like it's an age-old thing. How a bank would use our platform is basically they go, okay, for a KYC provider, what are the things I'm interested in? They will define those KPIs and they will put 2 to 3 vendors through a technical proof of concept.
Now, will you bring the vendors or will they offer the vendors?
Both. So either they can bring 2 vendors or 1 vendor. They go, hey, we've been looking at this and can you help me with the other 2?
Okay, and let me ask a question. How have you come to a conclusion on those 2 other vendors?
So again, region, size, and the other thing is we have a vetted and a curated list of actually 700 plus vendors that are on the NayaOne marketplace.
Oh, so you think there's way more than what we give it credit for? Actually,
yeah, because we're all stuck on the checks, right?
Welcome to today's episode of Couchonomics with Arjun. Joining me on the couch all the way from London is Karan Jain. Karan is the founder and CEO of a company called NayaOne. And for those who are wondering what NayaOne means, at least in Hindi, where I believe the name originates from, and Karan will correct me, is the new one. Naya means new. But before I start incorrectly explaining what NayaOne does, let me welcome Karan to the couch. I guess, Karan, the opening question is, what is NayaOne?
Thank you, Arjun. Thank you for having me. NayaOne, you're correct, is a Hindi word. Naya means new, and also in Arabic means new. And one is basically single spot where you go for your transformation. What NayaOne is a platform, basically helps large financial organizations, may it be banks, insurers, asset managers, regulators, to work with emerging technologies, fintechs, vendors, and accelerate the whole process. Our thesis is pretty simple. Change is inevitable. To change these days, you need technology. If your whole process of how you engage with technology is from the 80s, you're always going to be behind, and your customers and consumers aren't going to get the right goods. So that's where it comes from.
So fair enough. So you're an accelerant, if I may use that term. But obviously you do a lot more in terms of not just accelerate, but you help people with discovery, you help with people with, and we'll get into all of that. But let's just go back in time, right? So where does someone like you wake up one day and say, I want to create NayaOne?
So I was quite happy as a banking technologist, building products, delighting my customers, delighting my business.
Or not delighting your customers because you were still using the 80s processes.
Well, this was when I was working with large big tech providers, right? And I was like, okay, when you knew getting a product to market 3 to 5 years was going to be a thing and you didn't know any better. And then you go, there's this influx of fintechs in the market. And like, oh, nimble, everything. Maybe I should work with these guys and not fight. And there was a whole market change of let's work with fintechs, let's collaborate with fintechs rather than fight the fintechs. I'm sure you remember that phase, right? Where, so it's like, okay, but with fintechs came this influx. A lot of people saying, I can do everything. So, when you ask a vendor or a fintech, can you do this? Of course. There's never a no. Mm-hmm. So that makes, someone like me job really hard, because what you're trying to do is you're trying to make sure that the technology provider you're picking do they actually do what they say they can do? Is the technology doesn't even exist? Is it going to work with my stack? Is it going to be performant? Is it going to be reliable? Because at the end of the day, you're a regulated entity and you don't want to work with something that's going to fall apart on day 2. So what do? You need to run a proof of concept. You need to kick the tires. You need to do that. Okay. So that's where I kind of went down that route. But then I realized because you're a regulated entity, you need to go to third-party risk management. I was like, okay, well, I don't have 6 to 9 months to onboard every single fintech I'm interested in. And if I'm not looking at all the fintechs, I'm actually doing a disservice to my customers and my business units because I'm not putting the best solution, most innovative solution in front of them. So that's where, was crying after work one day. And then when one of my peers said, hey, why don't you go get a Sandbox? I'm like, what is a Sandbox? Like, really, what is a Sandbox? Like, I had not heard of Sandboxes. This is 2018. I was like, what is this, like a UAT environment? They're like, no. It's like, go spin up some cloud compute and do your thing out there. But I also just finished rolling out security, privacy, GDPR, and a bunch of other things. I was like, well, this doesn't quite really make sense. So then I went on long story short, ran a big search to find the Sandbox provider that could help me accelerate my engagement with fintech so I can put product into market faster in a safe, secure way. Didn't find one. But in the process, I'd spoken to enough bankers to kind of go, hey, who do you use? Who do you use? And they're like, oh, no, we're all struggling with this. We're all struggling with this. I'm like, so that's where I kind of saw the opportunity. And that's where it was born. And actually, the original name of the business was Fintech Sandpit.
Okay.
Because we were just doing fintechs and we were just doing Sandbox. And we changed it to NayaOne because what we realized, fintech wasn't the only thing that we were able to help with. We were going down reg techs, insure techs, emerging tech, enterprise vendors. And it wasn't just about the sandbox. People needed synthetic data, etc. So that's why there was a change.
So we'll come to all of that, right? So let me ask a question to you very simply. You worked in the bank. You work now on the other side. It gets said quite often that banks seldom achieve the ROI on their innovation projects, right? If you were to just simplify that question, what are the reasons? What are the reasons why you think banks underdeliver on return on investment on innovation initiatives?
That's a fantastic question. I don't know. I think we'll probably do a 45-minute session on this alone. Why do banks seldom deliver?
Yeah, or often fail.
Often fail
Yeah.
on their ROIs, and it's not just the innovation projects, right? It's all their projects, and I think a lot of it, like again, the basics here, right? It's the regulated environments, it's the matrix network of approvals within the bank, it's the legacy infrastructure that's involved, and then it's like, okay, the new entrant, may it be a technology or a human, has to navigate all that, right? That kind of all slows down the process. But also what happens is the strategy changes as frequent as 18 to 36 months, which means you're never sticking to one thing to get it done. You look at, like stating the obvious, but the reason JP Morgan's one of the most successful banks is because you've had the same CEO for a long time, and you've been able to stick to strategy. We've got the longevity, right? And that's just a very, like, one example, but the concept applies. It's like sticking to something. It does take time. That's one big macro reason. But the other thing is, it just takes time to go from idea, hey, my customer needs this, to actually getting in their hands. And that's where, like, from our point of view, from idea to getting a product into customers' hands is somewhere between 2.5 to 3 years. And unless it's pandemic, you get it in 4 months. But, it's not, that doesn't happen on a daily basis. That's what NayaOne tries to address, is how do you shorten that time, the time to market, time to value for your consumers, from ideation or as an idea to, can I get it in my customer's hand? And the competition landscape is very different these days.
Okay, so let me throw a couple of more sort of hypotheses that I've heard, and maybe they're true, maybe not true. One gets banded around quite often, which is digital transformation in its classical sense, where everything went from ideation to delivery, which was very much a waterfall type arrangement, lots of business requirement documents being written by people who didn't really fully know what existed out there, because technology is moving way faster than actually even sometimes customers have needs, right? And as a matter of fact, I think a lot of latent needs are getting, as they say, opened up or available. Latent needs are being sort of unlocked, right, with technology. And what banks are now saying is, something, this BRD approach doesn't work, so we move towards a more agile, continuous improvement perspective. Well, that's easy to say and done. That can be done. Processes can be changed. But the other hypothesis which is coming in is to say, let's work with the best of breed outcome provider, not necessarily a developer, and that could be a fintech, right? Where we just plug in the fintech and accelerate that journey. Now, how far are both these statements true in reality?
What was your first statement?
That we, let's move to this whole agile way of working, right? So everything is about continuous innovation. So you never have to go from, you have to go from ideation to delivery, but ideation doesn't wait for a customer to come knock on your door and say, you're
ahead of your customer. Yeah. You're ahead of the market. Your strategy backs it up. Got it. And then the second one is what's true about plug-in fintech solutions.
Is it truly happening? Are they truly plugging in fintechs?
Yeah. I mean, look, I've seen banks. We know banks who've done both of them really well. And agile, even you break it down into business being agile versus your development processes and your DevOps being agile. So that statement is true because I've seen it firsthand through a number of organizations happen. Culture is a big part of it though, right? Getting that culture right is really important. Just because you order very expensive agile consultants to come and deliver and run Scrum doesn't actually mean you're going to be agile. This is actually, it takes a while to actually bed that in. It gets better. On the fintech, deploying fintechs to reach your customers faster, and that's what we do. It's not true all the time because you've got limitations. So it's the scope of the change. So you're like, okay, well, I've got a really legacy core provider and I want to plug in, like an on-fighter type capability to do the KYC. And it's like, okay, great. Yeah, you can do that. But if the whole other stack is really old, it's going to take a while. And the rest of your experience isn't going to match that experience. However, if you're kind of halfway, half decent stack, and it's like plug in and fighter, you'll get there. So that is true. Plus, we're also seeing where people are coming up with their tech stack strategy backing their fintech strategy, which is like, okay, we need a really nimble core, we need an API stack on top of it, and they're just going to get basically point solutions to actually construct the whole customer journey.
And that's people talk about atomization of banking and or unbundling of banking. I personally think a lot of that is still words. I think maybe if you're a new bank, you can build yourself out that way, but if you're a large bank which has been there for 100 years, it's hard. But then let me ask you an obvious question. Culture is important, totally. Not everything with the fintech can be done because legacy has its constraints. But how does NayaOne solve either one of those problems?
Great question. It's actually technology's 1/3 of the problem.
Okay.
Right. It's actually using technology to help the people in the process. That's what accelerates. So what NayaOne does is using it, we've got design, security, privacy at the heart of the platform. That alleviates all the process governance things that sprout up that slow the whole time to value down. So we're actually using technology, the way we've designed the platform, to address some of the risk appetite concerns that banks typically have that slow them down. So we're not fixing the process, the risk appetite, the third-party risk management. What we're doing is we're applying technology to give comfort and security to the bank that it's okay, you can move at fast.
Okay, Karan, let's do something for everybody's sake. Walk us through a use case. Just give us a real life example of something you've done for a bank so that people really understand what does NayaOne deliver.
Sure. So let's say you're a bank, you want to, you want more customers. And let's go with the savings product. Okay. So you look at what you're doing today and you kind of go, okay, well, actually, if we reduced our onboarding time, we could have more customers because we're seeing a huge drop off and they go into our competitor. Fairly normal use case for a lot of banks.
And that work is done by the bank themselves. They do that figuring it out.
Yeah.
You have no involvement in that.
Okay. They might come to us and go, hey, help us. How can we increase our deposits or how can we increase our thing? But we're not a consultancy. We're a software platform. Right. But we see a lot in the market, so they might ask us a question. Or they might come to us through one of our partners. At that point, they go, okay, well, here you can look at a couple of things. And they might come to us with this, which is, hey, I need a new KYC solution that is faster, has more accuracy and more coverage depending on the region we operate in. Or, hey, I need a new onboarding solution, but I've got no idea which one to pick. I keep seeing this person at every single conference, so they must be good. Over-indexing when it comes to vendors is a thing, like it's an age-old thing. So how a bank would use our platform is basically they go, okay, for a KYC provider, what are the things I'm interested in? They will define those KPIs and they will put 2 to 3 vendors through a technical proof of concept.
Now, will you bring the vendors or will they offer the vendors?
Both. So either they can bring 2 vendors or 1 vendor. They go, hey, we've been looking at this and can you help me with the other 2?
Okay, and let me ask a question. How have you come to a conclusion on those 2 other vendors?
So again, region, size, and the other thing is we have a vetted and a curated list of actually 700 plus vendors that are on the NayaOne marketplace, but we only keep it to 350 based on the relevance, right? So, and these are vendors that we've vetted or one of our customers or partners have vetted them into the NayaOne.
Okay, and I'm sorry, I'm going to keep asking some question. What does vetting mean for you? Because you're not a bank.
But half of our team is ex-bankers. So the platform is actually built by bankers and, by financial services, not just bankers, financial service individuals for the industry. We know the questions people ask. We know the 300 questions that banks, insurers, everybody asks before a vendor gets brought in. We ask the 40 real ones that we know that actually give you the signal whether this vendor is the right vendor. And the other thing is we don't onboard anybody unless we can get access to their technology.
Okay.
Right. So there's absolutely zero vaporware on the platform.
Okay. So now I'm a bank. I wanted to do everything around my savings. Now we've got 3 vendors, one which I have brought to the table, two you have. What happens next?
So they will spin up a project. Let's call it a project, which is to identify the KYC provider. At this point, they've got the same KPIs, same data sets. So we also have synthetic data set they can use to validate these vendors, which is, again, a hard point for...
And for people who don't understand synthetic data, just spend 10 seconds.
Dummy data, it's fake data, but with the right statistical attributes. So it's not totally dummy data. It's value to actually help you identify. Because the other issue, Arjun, we see in the market is when banks test vendors in vendors' environments, they're using vendors' data, and of course it's going to work in your own data. So this actually gives them that neutrality.
Okay, and that's very important.
No, that's a great question.
And all of this is happening outside the bank's environment, correct?
That's right. So we don't integrate with the bank. It's a safer state outside the organization, which doesn't get caught up in the regulatory.
But do you not connect into the bank in some form or the other? So aren't there any bits of data which needs to go into the bank and can bounce back?
They're using it from their browser.
Okay. All right. So please
it's
carry on.
Totally a SaaS product.
Okay.
So then you've got those data sets. So they're testing what elements is of the accuracies of the coverage, et cetera. And then they'll basically invite 3 vendors in to 3 different sandboxes or sandpits where they will prove to the bank that they can actually meet their requirements. The 3 vendors don't see each other. The bank's able to simultaneously work with all 3 of them and actually compare apple for apple, and actually go, okay, which solution's better than actually the one that I kept saying in the conference is quite good, but actually this new one that I just found actually meets all my requirements and the pricing's better, and actually because they're a little bit younger, we'll actually be able to work with them a lot bigger projects.
So that's a very important thing you just brought up. So in that sandbox arrangement, or sandbox environment or sandpit environment, you're not only just solving for it technically, but you take the conversation into commercials.
So the product itself doesn't do that, but because the bank has been intimately able to see the product in action and been able to compare the product side by side, it generates, oh, I didn't realize that was a possibility looking at vendor number 3. Oh, I didn't realize actually that's the price. So you get basically comparison. Because if you think back before NayaOne, you pick one vendor. Okay, sure, you got to do your procurement team says you got to do an RFP, so you put 2 more in there, but you know the one that you want to get. But the reality is,
don't ever say that to a bank.
That's how it goes. Like,
no, I get it.
Right.
I get it.
But the reality is, but you're never actually getting close to 2 other products to go which one is actually going to better meet my needs. Because just because it's the best KYC provider in the world doesn't necessarily mean it's the right one for me. Because my stack might be different, my customer needs, my strategy might be different.
Okay. Can I ask another question? I'm sorry. I guess this is going to be the most detailed
I'm
podcast.
enjoying this, so please keep going.
The podcast. Yeah, I guess these are easy questions for you, right? No, I think the question here is, so how much... See, one of the things I actually see, and I think this is fair on all of us, right? Technology is moving at a rate which is very fast, and it's much harder for all of us in day jobs to sort of keep up with it, right? And even if you take KYC, there's a lot of innovation going on in that space, right? And we don't know what we don't know. So how much of a role does NayaOne play in helping me, the bank, come up with the right criteria of assessment so that I'm not myopic in my selections?
Yeah, so it's the fine line we try to balance by being a value add to our customers rather than being a consultant to them. So for example, a customer will come to us and go, hey, I'm looking for a KYC solution. Okay, what for? What are you trying? Is it a new product? Are you trying to get into digital assets, or, is it a new line of product basically? And I'll be like, okay, no, I just box down that I want to replace this, but in 5 years, we want to be able to bank crypto. for argument's sake. So at that point you go, okay, what's out here now? But it's actually more about which one's got more an open architecture and they can actually use it in 5 years or 3 years from now. And that is based on just knowledge base of experiments we do all around the globe and who's the best technologies out there. Like, we the markets we operate in is in UK and US, and we're actually able to port technologies over all the time because that technology provider doesn't operate in UK, but it's actually got really good tech that meets your use case, and have a conversation. They might be open to opening up an office.
So you guys are enabling, I guess, young, small tech companies, fintechs, to actually come across borders because you in effect give them a soft landing.
Soft landing, and I'd say the biggest range of companies that we're helping would have like a couple of hundred customers on either side of the pond that we're helping move across the thing. Because you take the barrier out, because it's about, again, going back to our core role, we're an accelerant, time to value for a organization.
Okay, so now we've chosen the one we like out of the three.
Yep.
I guess we've signed the commercials, or we've agreed the commercials as a bank. You're obviously not involved in that process. Yep. Things move into production environment, I'm assuming. So you come over the firewall, if I may use that term.
Yep.
You leave the party at that stage.
Yeah, so we're basically platform that's used by the bank, and this would be one of the use cases. So it might be an onboarding team or the retail team that might want to use it, but there might be other projects going on. But in that particular use case, yeah.
So in how many instances, and again, you don't have to give me the exact number, but just give me a flavor. So how many instances have banks actually gone and said, I'm just going to white label NayaOne and make this my own captive platform, and maybe add a few bells and whistles because we like doing things differently, because different people do have different journeys in terms of how they procure and interact with technology providers, versus people who say, no, just come in when we need it because you really aren't integrating into our environment. So in effect, you can come and go as you feel free to. What's the balance between the customer base? Or does it usually all start here where it's one-offs and then...
It's the opposite. It's 99% enterprise platform where they've got annual subscription. They use it for accessing Gen AI. They use it for the KYC example. They use it for prototyping. They use it for testing cloud.
But Karan, doesn't that just make your life much harder because they have to make a much more substantive decision to work with you rather than a sort of pay-as-you-go model?
No, not really. Great question, though. It doesn't, because it just depends what kind of banks you're working with. So I know at this point, I'd say, an average bank we work with, like an average usage, I'd say is like somewhere between 50 to 20 proof of concepts a year for in their first year. And you go, okay, you will start working with a smaller bank, it might be a little bit less. And but no, it doesn't actually. It's an accelerant for them.
So most people sign up for a longer term period, I guess.
Yeah, and they sign up, they start with 1 to 2 business units, and as the word spreads, it's like, okay, well, why is those 2 business units delivering more? Why are they getting more out, for their customers? Like, okay, we want to get onto it, and then just more and more business units.
And from your perspective, the measure of success is speed to market, or is there something else in addition to that?
It's
or speed to, I guess, outcome. Market is
so time to value.
Time to value. Yep.
Time to value is how we measure it internally, and as well as like how long did it take to kind of make the right decision. It's interesting because sometimes I go, how many of the proof of concepts that go through your platform end up in production?
I want you to answer that question.
It actually doesn't matter, because people will would gauge success based on how much went to production. But just because you ran a proof of concept and you made a decision not to progress with that vendor is actually a good thing, because now that wasn't actually going to be a right decision.
I agree. So you've helped them not make a wrong decision. Okay. But having said that,
save them from a wrong decision.
But in the long run, people want to make decisions and get forward. We all understand that once things move into the production environment, you move out of what I call the laboratory effect, right? A number of other factors come into play, which are far beyond the control of not just you, but even the team which was testing with you, right? What percentage of these programs or initiatives then really deliver value? And And is your argument just to say it's higher than what they did previously, so therefore it's justified?
Look, I don't know if it was higher than what they did previously because of two reasons. One, they never measured it.
Right.
And two, like most people don't measure it, most organizations. And the number two, you usually pick one vendor and you take them all the way to the end. And then when you close to production, you go, it doesn't work. You're like, doesn't matter. I've now sunk 18 months in this. We are going live. I don't have time left on the timeline here. Right. So it's really hard to measure it. In terms of what we see, so if the project, one of the questions in the platform is the project funded or no, I'm doing it for funsies, right? Like, so, okay, after that, if it's funded, most of them go live. And I'd say 60 to 70% progress. So 30 to 40% will go, no, this is a bad decision, don't do it. And it'd be like capability meets, but it fails on performance, for example. But then eventually they will go and find the right solution. So everything does move forward. It just moves at a rapid speed.
Okay, so now I'm gonna wear two different hats. I'm gonna wear a hat of a fintech or a technology provider.
Sure.
You could actually be quite problematic to me, right?
How so?
Because I come onto your platform and I keep losing out on every opportunity that I could possibly get, right? So are there vendors who are saying, you know something, we really don't want to go on the NayaOne platform, right? Because what happens is this particular KYC provider, and might be superior, tends to always get picked, right? I'm better off going directly to the client and not conforming to whatever NayaOne puts me through.
Yeah, sure. There's a lot there to unpack. Really good question. So as a fintech, you come in and you're like, okay, why would I go through you? What's my value? The value is actually time to decision for them. Because all these, if you especially think about, young emerging and getting established, like I don't have 12 months unless you're PE backed and you've got all the time. And you don't actually, PEs are on your back to kind of go, let's go. So it's accelerated time to decision. You're not getting down the road or down the garden path too much. The second thing is, if there is a KYC provider that's always winning against you, you have no other way. You have no way of knowing that. Because none of this is public. This is unless the bank chooses, every single bank that they lose out with keeps telling them, hey, you lost out to a particular vendor. That provider has no way of knowing that. And if that is happening, I think that you really need to evaluate your product and see what's happening. And you've got a good competition. From our point of view, right? Like we do get people like, hey, I don't want to jump on this. This meddles with my sales process. And
that's what I meant, right? It meddles with my sales process. It meddles on what I really want to sell, right? You are basically commoditizing me to a set of criteria. There is so much more to me as an organization. Where does all that go?
So the bank is still talking to the fintech. We don't replace that conversation. What we help is accelerate you actually running a proof of concept and technically proving out that the product exists and it meets the customer needs. We're not taking away your charm and everything your organization has to offer. You can still do that outside the platform. That's how you actually get to that point of testing. It's an acceleration.
It's an accelerant. Okay, let's come out of this conversation for 2 minutes. Thank you for explaining. I think that was fairly clear. If someone like me can understand the process, I'm pretty sure I do want to just want to add to your point. Like we do sometimes get pushback from sales teams. So some sales teams absolutely love it. It's like, the ones that are confident in your product, they're confident in, their value prop, and it's like, okay, if we go in, we're going to win, And we sometimes do get certain profiler companies, and it's always the sales team that will push back because they're like, no, I have a sales process. This actually disrupts my sales process, so we get that. But then, eventually when you speak to the founders or the CEOs, they're like, it's a no-brainer. This is actually not only a lead channel, but we should be standing on the back of our product, not in terms of how much time we spend with the client outside. Okay, fair enough. We met a couple of years back?
Yeah.
Yeah. You've been at it for about 5 or 6 years?
Yep.
Right. I think we met just after COVID, right? Right after COVID in London, right? I do remember. Talk to me how you have seen innovation in banking evolve, but I'm going to just ask you to be a little bit more pointed. Try and segment these banks into large banks and sort of slightly mid-sized banks. But with all of them, I want to talk about legacy banks. I don't want to talk about the new age banks which are set up in the last 3 to 4 years, right?
Yep.
How have you seen between these two segments, call them large and not so large, How has innovation evolved over the last sort of 5 to 6 years while you've been doing what you've been doing?
So in 5 to 7 years ago kind of market, and again, depends on the jurisdiction or the location, there was a lot of theater. There is, and there tends to be an okay and acceptable amount of theater around our industry. Sure, it's got its place. I've come to accept to it. But what I started seeing was the innovation has actually changed. It's no longer innovation. Like, sure, there's innovation teams that play an important role, but innovation is actually part of the business now. I'm talking large banks for a minute. And this is very much driven by the pace of change. It's driven by the pandemic, right? Where everyone had to accelerate and digital all of a sudden just became, it's the new norm. And people started to slide back, and that's been picked up again. And now you're seeing, rapid advancements in technology, tokenization's back on the agenda. Gen AI has kind of got every CEO kind of thinking, hey, what are we actually going to do? What does this actually mean for my workforce? My shareholders are asking what we're doing around this. So, that's driving a lot of change within these large organizations. And it's just pure economics. The markets are different right now. So these are all the changes, all the factors that are driving innovation, but it's not driving innovation the way it did 5-6 years ago. It's like, oh, let's go study what's happening. No, we actually need to innovate. We do need to get our product. We need to get our product cheaper, faster.
So it's coming top down, and it's deeply embedded into what everybody's performance indicators.
That's a loaded question. I'm gonna skirt around that one. I don't know everyone's KPIs or indicators, right? So, but it is coming top down, but it also is driven by the P&L owners in these organizations, because the market is fierce. And you have fintechs, you have neobanks. Yeah, we're not talking about how they're doing it, but they are on the Achilles heel. They're actually one of the bigger factors that are taking customers away. So we talk about internally the 3 R's. It's the new revenue. It's the retention of the existing customers. So that still has to be value add, faster, cheaper, better. But also is the recovery. So are you losing money through fraud? Are you losing money through cyber, and inefficiency? So the 3 R's are very, very prominent across all organizations. And it's not just banks.
Is it any different for smaller banks?
It's worse.
Worse.
It is different.
Worse for the better or better for the worse?
It's worse for the worse, because the smaller banks don't have the luxury or don't have that cushion or the padding to take their time. But yeah, sure, they can be more nimble, but they've got the same regulation they need to meet just as a large organization.
So what are they doing differently then?
It depends on the type of the organization, but what they're doing differently is actually just becoming super focused. Because of, again, when we say smaller organizations, it comes down to the product line or the jurisdiction or the size. So those are the 3 ways how you'd measure a small or a smaller organization. But it's just getting focused. Whereas the large ones are clamping down basically and going, okay, we're going to be to the core of business, and but the point is they're not talking about innovation, they're talking about transformation, not in the digital transformation piece, but it's actually it's a new flavor of transformation that we're start seeing coming. It's like a combination of the old digital transformation and the new innovation.
So let me ask a question. Choose not to answer it because maybe it's not an area where you're comfortable answering. So things like open banking are encouraging banks to adopt new operating models, right? And let's talk about the one which everybody talks about, banking as a service, right? Which, in my humble
opinion, fairly big topics.
Yeah, but it is. And let me throw the third one, embedded finance, and we got pretty much everything covered there.
That's right.
Right? Obviously, hot and then you throw AI in the mix of it, which is apparently an accelerant. But if
I just want to add cybersecurity because I was
exactly,
feeling
right,
left out.
We were playing bingo. But who do you see? Do you see these smaller banks really evolve towards going after this banking as a service space? Or do you see the big ones being able to sort of digest the fact that maybe in the short term there is a bit of cannibalization of income, but in the long term they will emerge as the dominant banks because this will just become another product line? I'm not asking you to be a betting man, but do you see, are either set of banks better placed to respond to this shift in operating model?
That's a really hard question. I really like the question. So I'm going to take a punt, and I don't know everything. So I've seen some small banks, really small banks, do really well at BAS in States. But I've seen also the market being absolutely shafted by the regulator in the last couple of months, and I'm sure you've seen the same. When you start looking outside in other jurisdictions, it's just less volume, so you don't see as much, and the regulator hasn't kind of woken up to it. Yeah. Plus, there's more compliance, and everyone's compliant, a lot more compliant, better compliance practices. So I think where small banks may struggle on the bad side is actually not having the compliance piece sorted on the bad side. Large banks, I think it's definitely a strategy question, because they can't go, okay, we're going to shut everything. We're going to be pure commodity, because that's what that is. We're going to be pure commodity, and we're just going to go and talk to every single thing, because there are other players in the market who can just as easily leverage other charters and do the same thing. So I think it will be, I think large banks are trying, and they don't want to miss out on that pocket, because they can leverage their corporate institutional bank side of the business, the SME business, to actually grow if they had that capability. But I don't see them going, okay, we're going to shut everything else down, and we're going to...
No, I don't see them shut themselves down. I actually don't. I don't think it's a binary question. I'm just saying I think a lot of them will create a bank within a bank, or a BaaS bank within a bank, right?
Yeah, for sure.
But the question here is, does, that BaaS player will need that sort of agility, and culturally, will they ever be agile enough? And that's the question I always ask, which is, every bank is a digital bank in some stretch of the imagination, right? Because, JP Morgan spends, I don't know, some $7 billion in a year on technology, which is far greater than anyone else can even imagine. I don't even know how many zeros there are.
So next 10 banks combined.
Exactly, right? Something like that. So they are as digital. The question here is that, will large banks have enough within themselves to launch these digital attackers, to have BaaS as a service line, which is sort of helped by the back of the bank, but the front is nimble and agile, and signs all these kinds of embedded finance deals? I think the jury's out for me. There are people who say the big banks will prevail eventually. There are smaller banks in the US who are doing phenomenally well, but I don't see any big banks shut shop and say all will be is the BaaS player. I don't see that happening. And maybe it's just too early to call. Let me ask you another question, just to put you further in an uncomfortable spot, since we made that journey already. Fintech bank relationships, right? Mm-hmm. So we spent I guess this is how old I am, is when this whole fintech shenanigans started, right? It was a lot about, David versus Goliath. Fintechs are coming, banks are about to finish. And, the truth is, banks are making bumper profits. The fintechs have been hugely impactful in the sense that they have forced banks to make certain changes at a faster rate than the banks would have typically done, right? But people have to appreciate that banks are highly regulated. So, at the end of the day, they need to manage that compliance. Are banks dealing with fintechs any differently than they were a few years ago? Is it still a master-servant relationship? Or are they actually genuinely co-creating, collaborating, and partnering with someone which is, in effect, a speck in the dust when you compare to some of these big banks? Are they giving them the due respect?
And it really does come down to the bank and the individuals within it. But what we're seeing is the needle is shifting, even from when I was trying to work with fintechs in 2018. We're you start with all the right intentions, but they don't know what the general ledger or a transaction looks like. You're going to lose your cool. You're trying to work with me, you don't know what a transaction look like. But at the same time, we are seeing that there is a lot more partnership. That doesn't mean that the procurement team doesn't try and squeeze everything out of the fintech or the vendor, because that is their job, that is their KPIs. Not saying right or wrong.
So the procurement guys are still left to go crazy on them?
Well, that's their job. To get the best value for the bank. So I think that, so if you look at the spectrum of things, starting with the front door where the fintechs enter the organization, the innovation team, the product team, the technology team, the procurement, legal, everything they have to go through, there's pockets of positive change across all of them, but that doesn't mean I think we're there yet. And it does come down to, I'm giving you a consultant's answer, it does depend to what organization you're talking to, how long they've been at it, what's the top saying, right? Is this,
But are you generally seeing a shift? Are they becoming, because I can see it myself, right? And I am a consultant, right? And I can genuinely see, and I've been a consultant most of my life, although I've worked in industry too, right? I think banks large and small, I do appreciate as a culture driven, they're starting to appreciate that although these players are small players, the value they can help unlock is quite tremendous.
Yep.
So they do want to nurture them. A number of them have created very aggressive CVC arms. And, they're investing in the US. There are banks with over, 90 to 100 different investments in fintechs, right? Very much like with the way the big tech firms have operated, right? They've invested, far and wide because they realize that, acceleration is also a width game, right? In the sense, the more, if I may say, the more speedboats you let out of the port,
it's definitely a funnel. It's definitely a funnel.
It is a numbers game, right? So you can play it. So,
and the acceleration within.
And I actually do agree, and I think, and this is where I actually get quite interested in platforms like yours, because what you're trying to do is say that we're going to see a proliferation of players in the market. That's pretty much the cycle it'll take. You're still having to make material decisions. Can we help you make a material decision slightly better than you would have done yourself at a rate which is much faster? Yep. Right? If I was to just sort of summarize your thesis, not done a good job, but
no, it's fantastic.
It's the best I could do it. Let's come back to NayaOne, right?
I just wanted to add one point, because to our earlier discussion, we've taken the angst out of the process. Right? Where you don't have to go through the cloud, the security, all these other reviews, which then take 6 months before you can even have a product conversation, a value add conversation. So it just like using our platform to aid the process and the people, to my earlier point, that's where we start. Okay, we can get to that later. Right now, I just want to know what's your value prop and prove it to me that we can work together to actually help my customer. That's one. The other thing is there's immense pressure on bankers right now to actually deliver value to their consumers, and not just the front line, but A to Z. Mm-hmm. So I think that's also had an impact in terms of how, to your point, treat a fintech or emerging tech providers. Like, I think there's something here. I think you can really help me. Let's see if we can do something together.
So that takes me to the next question. So perfectly placed, right? Are you seeing most of this value in the consumer retail banking side, or are you also seeing the corporate commercial banks, right? Also realizing, because let's be honest, that side of banking is substantially larger than the retail banking side. Yes, the number of customers here are a lot more, but the value that sits out there is huge. Are banks starting to use platforms like you to innovate on that side at a rate that you believe is noteworthy?
So the volume of money or dollars is greater on the CIB side. However, the number of transactions is a lot less than over here, right? So the volume we see go through our platform is greater over here on the consumer and the retail side. The next set would be the SMB side.
Yes, I agree.
Which is a small business market. A lot less. There's still things that need to happen on the CIB, the large.
There's a lot of interesting payment stuff going on that side, corporate payments, right?
Yeah, corporate payments, but the payments then you have payments.
You're looking at payments as a service line.
You get the horizontal. There's tons happening in the payments, and you could, again, depends on the size of the bank and how they're structured. You have payments in all three business units, but you also have the payment stack that's running across, and we're seeing tons of action that, because banks are also getting smarter. Like, I don't want every single business unit buying a payment solution in each business. I want to buy one payment solution that can serve everybody, and then whatever else you need on top. So we're seeing a lot of that payments, but then we're also seeing a lot of action out of CTO and tech teams, platform teams, because they don't, like any other business unit in the bank, they can't get access to technology to keep evolving and helping the bank. So I'd say, CISOs and CTOs are actually one of our biggest business.
And so that beckons the question here. So you're not only solving product issues, right? You're not just saying, here is another KYC tool, here's another savings product, another wealth product. You are solving for wider technology needs?
It's transformation, right? And transformation needs technology. And technology is not just needed by the front line, the middle office, the back office. It's actually needed A to Z. So literally, we have lawyers looking at our platform, looking for legal tech, especially in the Gen AI space. Like, okay, because it's really hard to get any Gen AI inside the bank right now. So they use our platform, which is not integrated with the bank, to safely evaluate legal tech solutions. So how can that help them? Same with marketing tech. Obviously, that's a little bit more advanced.
And is there a strain on your business from that perspective? Do you have to learn a whole new trick?
No, like the way we designed the principle without giving it away, it's like, it's very simple. It's marketplace that holds high standard, is synthetic data, which statistical approach can't be reverse engineered, and there's secure environments orchestrated as a SaaS platform. You want to test a vendor, you want to compare vendors, you want to run customer journeys, you want to build prototypes, you want to test emerging tech, you want to test 3 tokenization. That's what banks do.
And are we starting to see, I guess you're starting to see a lot more around digital assets now?
Yes, we are. Yeah, for the last 6 months. Tons of stuff going on. And now we're starting to see CBDC pop up again.
And does that mean that you're having to develop a whole new set of people? Because you said, a bunch of bankers actually set that up, but these bankers are now technologists, right? They're working with you. So is that like a whole breed of people that you're going and chasing down and saying, hey, help us decipher this digital assets world so that we can start, picking the right players and vetting them onto the, you use the word vetted. Does that sort of...
I hadn't actually considered it till you asked me this question. No, we're not going higher on digital asset. Of course, we have a few people that are quite good at it. But because we have such a good network of banks and technology experts, we just call them and ask.
Okay.
And go,
fair enough.
What are you seeing? What's happening? We talk to VCs enough, so we get there's enough signals flowing through the NayaOne network for us to know where the trends are heading.
So you keep opening up the next questions for me. I think it is, and I have not shared any of these questions with you.
That's funny.
VCs was an interesting market. Are VCs coming after you to say, tell us about these fintechs who are doing better than others?
Every single one of them.
And are you monetizing that?
Not yet.
Is that something you can monetize and still keep yourself as independent third party?
Our number one priority is to help our customers accelerate time to market. Part of that is actually remain neutral. So anything that touches remain neutral, like we won't venture in. We are seeing data on what areas are being searched, what fintechs are being searched. So we see all of that. That was a very smart venture arm. The first thing they asked me, literally 2 minutes into the call, who owns that data? I'm like, which data are we talking about? It's like, that data. It's like, we do. It's like, oh, can you sell that data? And it's like, they literally got there in a minute. And that was about a year ago. So the point is no, we're not monetizing that data. I don't think we have a complete picture yet to be monetizing.
I don't think you should. Well, okay. Again, I'm nobody to say you should monetize the data or not. But let's be honest, early stage VCs would love to know that a particular product has stood the test, right? And that's part of the de-risking your investment, right?
Yep.
Because a number of these startups actually, unfortunately, don't even make it to the first enterprise implementation.
Yep.
Right. So I would have imagined that works for you. I guess it'll be
we have a CVC customer, right? So we do have CVCs as customers who would actually test their product.
CVCs make perfect sense to me. I think CVCs make perfect sense because they're part of that bank or financial institution's part. If they are going to onboard a customer, it's a de-risking strategy.
Yep.
We see that
or
in
at
this
least
part
know where they stand.
We have seen number of banks out here who have taken on early stage or if I may say young technologies where they've said something to de-risk ourselves. If you've got to put in a minority share and take a board position, it's worth it.
Yeah.
We safeguard ourselves because we're putting serious amounts of stuff in it. So I know, Karan, we're short on time. Couple of questions. I guess my second last question to you. So great to hear you're diversifying in terms of product, right? So it's not just fintech, it's techfin or tech or lawyer tech or all tech and whatever. You obviously entered the US, right? 2-part questions. One, what was so different when you entered the US, if there was anything? Did you have to evolve your model at all? Are you doing business in the US differently than way you were doing with the UK? Actually, there's a third part to the question. The second part is, and we didn't touch on it, you're also working with regulators, right? Talk to me a little bit about that as a part of, so what was different about the US? What's so different about working with the regulators? And then from geographic perspective, now you're obviously sitting here with me in Dubai, right? are you just here for the sun, or is there something more to
I
it?
just wanted to make sure you were okay.
Okay, well, that's always good to check on me, and thanks a lot for that nice bottle, that gift you bought for me too. But no, these 3 questions.
Yeah. So okay, there's a bunch in there to unpack. So difference between the UK market and US market. Key difference is there's actually way more technology and innovation that happens in US that we give it credit for.
So you think there's way more than what we give it credit for? Actually,
Yeah,
give
because
it credit for a lot.
because we're all stuck on the checks, right? Well, they're still using checks and they're still using them. Actually, there's way more technology and innovation that happens over there. Okay. Number
And
one.
I agree with you.
Number
Yeah.
2, the problem in US is 90% of the market of the banks. So also, I think there's 4,800 banks. That's the latest numbers. But there aren't 4,800 banks, because really what we're talking about is top 40 banks, next 1,000 banks, and then a lot of banks or organizations that help a lot of communities with finances. Everyone plays an important role, so don't get me wrong. But 90% of those banks actually work with only 3 core providers. So which means they can't actually adopt any of the innovation that's going on. Right, so I was in DC last week, and I actually noticed that firsthand at a different level, where if you're a small bank, you can't actually get anywhere because you're so tied to your core. And cores are trying to do things to make it more innovative, but cores are typically 2 to 3 years behind of what's happening in the market, and that is still fast compared to where they used to be. So that's probably the biggest change that I've noticed. Business model is same, and I spent a lot of time in US last year trying to work through different stage banks, and we're back to what we know, which is helping large to medium organization accelerate time to market.
So you see 1,040 as target, or just the 40?
Where we are today, it's a question I don't want to answer.
Okay.
So we can.
No, that's fine. No. We're not going to scratch it. You're allowed not to answer a question because it's too revealing. Why are you here?
So we're getting a lot of inbound interest from the region, right? So you and I have been in touch for a couple of years, and we've been talking about it, and we've spoken to a number of banks in the region, but in the last 2 months, the level of discussion, the depth of discussion, there's a different energy to it, and there's almost a sense of urgency to actually deliver on some of these things, and that's why we're DIFC is hosting the Dubai Fintech Festival. That's the main reason we're here, and we're just catching up and
getting to know the market better.
Getting to know the market, but also actually looking, because again, every jurisdiction, you asked that question, every jurisdiction has its differences because of how they're set up and what's real. So we're just trying to work out, can we actually help the region the same way we can help UK and US from acceleration point of view? On the surface, yes, but there might be something like under the hood that might totally stop us from helping. So that's kind of the purpose, and I don't think I'm going to solve it in this week, but we're definitely going to get pretty far.
Okay. Last question, and it's the first time I'm going to be ending a conversation without with someone who's not a regulator, but about a regulator. Regulators, we've known them to have used regulatory sandboxes forever, right? Why are the regulators using NayaOne? For what?
So we have a number of customers that are regulators around the world that use the platform, and they use the platform for a number of reasons. It's not in any particular internal education. Regulators need to be exposed to emerging technology, and they want to take that evaluate subtech, so supervisory technology. Number 3, to host tech sprints or hackathons to bring communities and economies together on topics that are important to that particular region. Collaborate with other regulators, because otherwise, whose house are you going to? Okay, here's a neutral environment, let's do it here. And it's also, some of them are running cohorts to actually help emerging tech partner up with banks, partner up with VCs to get what products we can actually take to market. In jurisdictions where regulator does play a role of helping keep the technology fresh or the innovation fresh. So those are and more.
Those are progressive ideas.
Those are very progressive, and they are 80-90% common amongst all our regulatory customers.
All your regulatory customers.
Regulatory customers. The other one is, which is when I say new about a year, is actually the alignment of regulatory sandbox to the digital sandbox. So you can have the oversight piece, but actually what is happening under the hood at the same time. And it's like, okay, is it actually fit? Is it safe? Is it responsible?
And I think, without actually spilling the beans here, actually a number of regulators in this region are also thinking about a digital sandbox, or if you might call it a business sandbox, to sit alongside the regulatory sandbox and in a way sort of be integrated with each other for all the right reasons and all the use cases.
Yeah, have the top of the funnel where the applications come in. So basically an integrated stack from a regulator's point of view, where they can do all their innovation, emerging tech, and de-risking the product that go out to the market. I mean, like one thing is like all of us are used to getting an iPhone every year, and our customers are still using apps that are like 2 to 3 years old. Like that is the customer behaviors is the other big factor that I didn't touch on, but like that's also a big reason that's driving the change.
Okay, fine. Last question. It's not a question. First time in Dubai?
First time in Dubai. Really?
But you only been here 24 hours.
Yeah, I got not even yet.
And you haven't seen any of Dubai except at the DFS, and you're now in my studio.
That's right.
All right, so I'm going to let you have your evening. I know it's already sort of past 8 p.m., but Dubai usually only wakes up in the evening. So,
I noticed that yesterday. Yeah, it's quite lively.
So you could stay up till as long as you want to, as long as you make it tomorrow morning if you have a panel or nothing. But Karan, welcome to Dubai. Hope this trip is good. Very interesting what you're doing. I think there's no doubt in my mind that accelerance of the sorts of what you're doing is what I guess banks, financial institutions, regulators, and I guess finance now has become, with this whole concept of embedded finance, who knows where it stops, right? Because you have telcos who want to become banks and have become banks, but retailers and super apps and so on and so forth. And I guess you guys just make life a little easier for people who have to make the hard decisions, right?
Simple job.
Well, I don't know if it's a simple job, but best of luck.
Thank you.
And whenever you're next in Dubai, we'll catch up. Obviously, I'll see you tomorrow at the summit most probably.
Thank you so much for having me here.
No, my pleasure. Thank you.
Thank you.
So, ladies and gentlemen, that was Karan Jain, founder and CEO of NayaOne. Interesting story. Apologies if we got into a little bit more detail than I usually do, but I think it was quite helpful to understand what these infrastructure players are up to, right? Because this is a very different sort of an infrastructure player than typically who sits on the couch and talks about fintech infrastructure. So with that, I'll say goodbye, and also a shout out to the Dubai Fintech Summit. Today was day one. I think they've done a wonderful job this year. It's bigger, better than the last year. There were some excellent panel discussions and sort of fireside chats. So with that, goodbye, and I'll see you next week.